your own sovereign wealth fund if you combine it with all different ETFs and stuff. I mean, if even if you had $1,000 laying around, if you laid it out in those percentages, maybe I'd take the 10% off for the bonds and emergency fund, because you're not really gonna do anything with $100 that don't capital appreciate. So really, if you're starting off small, do more riskier, and then as you go on, you want to actually have diminishing returns, because the risk actually spreads itself through that entire amount, and your statistical expected value goes up, because if you reduce the amount of possibilities where that depreciates, instead of like it reduces the amount of downside and everything, that actually increases your expected value, even if your diminishing returns are not as much. Like maybe instead of making the 12% from the S&P 500, you're making 9 or 10%. Even though you have diminishing returns, if your amount of outcomes in the downside are much lower than your upside of just that long-term capital appreciation, your expected value, your statistical expected value actually goes up than not many people realize, because in reality it's also just a numbers game, and if you can actually break that out through an average, like an expected value, the statistical upside goes up more than people expect and more than a robot can calculate. Because even if you put this into a calculator and you see, oh, my projected earnings are this much, well, that doesn't account for random stuff that happens. Especially if you invest in companies, the biggest thing that destroys companies are changes in management. And really, if you don't want to deal with all that crap, just make your own fund. You could also just not have any ETFs and just have a spread of, like, say 200 different individual stocks. Well, not really stocks, but different investments. You could just have real estate investment trust, investments, bonds, and really any alternative investments. That is actually a fund, and you can operate it exactly like a fund and take all the distributions and reinvest it individually to let the interest compound even more. Like the S&P 500 yields a 12%, but it also pays a 1.5% dividend that could basically be reinvested every year, and it compounds every 3 months quarterly, because that's when usually the capital distributions are made. And really, if you let that compound, that could probably compound at a 13%, beating a mutual fund just by reinvesting your dividends and really taking those distributions and reinvesting it. Like, some people, they just want the investment, and then they want to take the distributions as a benefit. But actually, if you reinvest that distribution, it compounds quarterly. That really probably makes you a bigger return than a country. And the exponential growth is much higher for an individual to have their own sovereign wealth fund than a country, because their diminishing returns are going to be much higher because of the just amount of capital required. But as an individual, you actually don't have to start with that much and have the same benefits of a sovereign wealth fund without actually all this stuff. You don't actually even need a trust and all this other complex crap. Just start making your own plan of different percentages that you're going to put into an investment account. Even right now, I'm just using a Fidelity market account, and it still functions exactly like a sovereign wealth fund that a country would have. Exactly the same. You could have this. You could even copy other countries with the public trades that they make. Even politicians, you could even track politicians' trades and copy their trades, which is kind of funny, but the only downside is that they disclose those trades after 30 days of the purchase, and they always wait till the last second to publish those trades because they probably already sold the stock. And so I wouldn't trust a politician, but just having your own sovereign wealth fund, you don't need all this other crap and lawyers, freaking financial advisors. I mean, you could have one. That's probably a good thing, so you don't have to worry about all this other stuff. But you really can't do it by yourself. Have your own sovereign wealth fund. It could. I mean, start with $100 and you have a sovereign wealth fund. Technically, I mean, it operates the same way, and you don't need that much money to start it. And actually, you have tax benefits, which are even better if you had distributions, real estate investment trust. I mean, really anything that a brokerage account lets you do, probably do a good amount of it. The percentages that I talked about, it's not actual financial advice. If you really thought it was, then that's funny. I mean, you gotta come up with your own plan. I'm just talking about what I did instead of what you should do, because I really think that drives in a point of all these fake financial gurus saying that you should do this, you should do that. But then if you look at their actual public trades, it's a bunch of trash and who knows, insider trading. Buy their course, buy their stuff, buy their coaching. It's complete bogus, and it's hilarious because they say buy all these different investment things. Oh, I can show you how to invest and all that stuff. But when you ask them what they actually do, they always stumble over their foot trying to tell you what they do. And that right there tells you that all these financial people online are complete crap. Absolute crap. To buy their course, all this stuff, it's a business just like any other. And really, probably the most meaningful thing is to have a timeless book that probably means more than buying their stupid coaching courses, all this nonsense. I mean, I can't believe people fall for it. I mean, I think I did when I was younger, like a couple $100. But yeah, you learn from experience. What can I say? Especially since the financial gurus, they're not in your best interest, especially on YouTube.